Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Arizona Metals. Please note, you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Mark Pace, Founder, President, CEO, and Director of Arizona Metals, which trades on the OTCQX Best Market under the symbol AZMCF and on the TSX under the symbol AMC. Welcome, Mark.
Thank you very much for that intro. Please take a minute to look at our forward-looking statement at your convenience. And I just kind of set out the purpose of this webinar today is really to answer a number of questions we've compiled from shareholders about our recently announced proposal to create two new companies and spin them out to AMC shareholders. So, currently, as it stands, the company is fully funded to drill and advance our K project while the spin-out process is underway, with approximately $40 million in cash as of September 30th. Before I get into the question and answers, I'd just like to give a quick update on the company and our assets. These will be new updates since our last webinar, which was on December the 6th, and that webinar is available on our website under the Investors tab. On the map over here, you can see our main assets, our K deposit located 1 hour north of Phoenix, as well as our Sugarloaf Peak project, which is located 2 hours west of Phoenix on the left side of the map. And Sugarloaf is one of the assets we're proposing to spin out to shareholders into a new company, along with a royalty on the K mine deposit. We did send out a detailed update yesterday in a letter to shareholders, and a copy of that is also available on our website under the newsletters page. And if you'd like to be added to that list, please email Morgan Knowles. Her contact information is on the website and at the end of this presentation. Just to get into some recent updates, in the last month, on January the 4th, we announced 4 new high-priority drill targets at our K mine project. These were identified by compiling data from the drilling completed at the central and western targets during 2023, along with data from a property-wide rock sampling program that we completed at the end of 2023. These 4 targets are outside of the K deposit. The easternmost of those targets can be drilled from pads already permitted under our notice of intent. Planning for those drill holes is currently underway. The westernmost targets that we've identified, drilling there will take place on receipt of an expanded drill permit called an exploration plan of operations. And we will provide an update on timing of the western targets once we receive the initial comments on that plan of operations from the Bureau of Land Management, which we expect to receive in the first half of this year. And just additionally, for some more information, last week we posted some answers to frequently asked questions we've been getting on our permitting process. Those are available on our website under the Investors tab. And we've got some detailed info from our key permitting consultants who've built a lot of mines in Arizona. And just on some recent drilling updates, at K, we have 2 rigs turning, both to produce an initial resource estimate. This is a combination of infill and expansion drilling. On January 9th, we announced the results of 9 new holes at the K deposit, as well as final assays from the western target. Highlights from the K drilling included hole 117, which intersected 66 meters at a grade of 3.5 grams per ton gold equivalent, and included a higher grade subinterval of 5.7 meters at 6.6 grams gold equivalent. This hole is in the center of the deposit. You can see it on the section here, labeled hole 117, and that infilled a 60-meter gap between holes 60 and 25. Hole 123, which is in the shallow part of the deposit, part of our shallow drill program to extend the deposit to surface, returned 28 meters at a grade of 1% copper equivalent, which included a higher grade zone running 4 meters at almost 2.8% copper equivalent. This shallow hole added considerable volume to the K deposit. It stepped out almost 160 meters above hole 114 and another 45 meters south of hole 120. So we are seeing, we're seeing good returns on that shallow drill program to increase the tonnage with relatively inexpensive and shallower holes at the K project, and that's in tandem with infill drilling down the center of the deposit. At the western target, we announced the final hole from the eight-hole program we completed last year. We intersected 1.8 meters running 1.8 grams per ton gold, as well as another 1.5 meters running 2.1 grams per ton gold. This is mineralization very similar to what we see on the edges of the K deposit, so we take it as a very good sign that we're in the right area, seeing the right kind of mineralization. This hole penetrated the western mineralized zone in two locations, one on each side of the principal anticline that we see at the western target. And the deeper of the intercepts intersected a consistent mineralized zone that we see going for almost 800 meters strike along the western edge of the deposit, which really confirms a mineralization down to a depth of almost a kilometer below surface. Obviously, our goal will be to do some shallow testing to extend that up towards surface, as well as to the northwest and to the north, which is going to be part of the plan of operations drilling. We currently have about 8 holes pending at the K deposit, which we'll release as soon as they're ready. And then concurrently with the drilling, we continue to advance metallurgical testing, hydrological studies, the permitting process, as well as the acquisition of additional private land, which is really to host future mine infrastructure. And just before I jump into an overview of our Sugarloaf project, some additional corporate updates I think worth mentioning. We recently initiated a new digital marketing campaign with a number of online mining-focused publications, as well as newsletters, and that's starting this month. We will also be hosting a number of site visits for analysts, newsletter writers, and institutional investors during February, March, and April. And later this month, we will be attending the BMO Mining Conference in Florida to meet with institutional investors, and we'll be doing the same thing during March at the PDAC. In May, we plan to attend the Deutsche Goldmesse Mining Conference in Frankfurt to meet with new European funds as well as family offices. And just on the marketing side, in March of this year, we will be filming a documentary at the K-Mine project with Viewpoint, which is a TV show hosted by Dennis Quaid. We expect that will begin airing in May to over 65 million subscribers on public television as well as other U.S. networks. And then just to give a quick summary of our Sugarloaf deposit before I get into the questions, this is the asset we plan to spin out into a new company called Sugarloaf Gold Corp. It's our secondary asset. It's located 2 hours west of Phoenix. It's very different from K in that rather than being high-grade underground, this is a bulk tonnage open pit target with a historic resource of 1.5 million ounces gold at a grade of 0.5 grams per ton, which was defined in 1982, obviously at a much lower gold price than today. And that is the purple outline you see on this section. So the purple there, the strike of the deposit is around a kilometer long. It's 300 meters wide. Very importantly, it starts right at surface. There's very little overburden. And because of that, we think it has the potential for a low strip ratio. So no dip to the deposit, very shallow, very wide. The other key attribute you need for these types of deposits is good recoveries. So we completed an extensive metallurgical program last year, and that showed recoveries of 95% in the near surface oxide portion of the deposit. And that's using conventional heap leaching technology. The deeper sulfide mineralization achieved recoveries of up to 85% recoveries by using whole ore vat leaching, which we think can also have an economic flow sheet at these kind of grades. And just to give you some idea of the what we see as the expansion potential here, the deposit is open to the northwest and the southeast. Those are those pink areas. So we have the exact same coincident EM or coincident mag low with IP high that's on the deposit extends almost twice the strike to the northeast as well as to the southwest, but it's never been drilled. But where there is outcrop in those areas, we see the exact same grades as on the known resource. So that gives us good indication, lots of potential for expansion on strike, and our own drilling has shown a lot of expansion potential at depth, which is what you can see in this section through the deposit. So the green outline is the historic resource defined in 1982 that was defined to a depth of only 70 meters. You can see some of our own drill holes. We've drilled mineralization well below 300 meters, although some of that, the deeper mineralization was in sulfide material, which is why we spent last year doing met work to determine, can you recover the sulfides? We know the oxides can recover up to 95%. that testing is now shown up to 85% in the sulfide material using a different process, vat leaching rather than heap leaching, but with real potential to have an economic flow sheet. So, just on that, we think we have the potential for a multi-million ounce deposit here because it's potentially twice the size on the strike and even potentially 3 times the strike at depth. And we're starting out with a historic resource of 1.5 million ounces. And I'll have a bit more to say about Sugarloaf and some of the answers to the SpinCo questions we've received. So, as kind of preface to this, the value we see in AMC right now is, the current share price around $2 per share. We're trading well below the analyst targets, which range from $5 to $10 per share, and they're all based primarily on the K deposit alone. We believe the K deposit is a world-class gold-rich VMS deposit, and it has unusually high grades and widths, much more than you'd see in your typical VMS deposit. This gives the potential for very low capital and operating costs. And additionally, this deposit is located in a mining-friendly county of Arizona, and very importantly, it's on private land. So we think the permitting regime is excellent where we are. But our view is that the current share price of AMC does not reflect any value for Sugarloaf. We believe we can create significant value by spinning this asset out to our shareholders in preparation of listing it. And this will allow Sugarloaf to be drilled without depleting any of the funds raised for the K deposit and also without diluting any of our AMC shareholders. So we have a list of questions we've received, and I see some of them are being repeated in the question box here. So what I'll do is I'll go through the questions and then I'll get to the ones that are being posted right now. So as I mentioned, January 22nd, we announced a proposal to spin out 2 new companies, create 2 new companies. One would be Sugarloaf Gold, which would host our Sugarloaf Peak asset located 2 hours west of the K deposit, as well as a 2% royalty on the K mine in a company to be called Arizona Royalties Corp. The first question we get is, why now? So we recognize that market conditions have been very difficult for exploration companies. We're preparing the spinouts now in a relatively bad market so that they're ready to list when market conditions improve. It can take months to prepare the legal and financial documents for a listing. This is one of the reasons we plan to first spin out shares into reporting issuers. These are public issuers that are not listed, but can be taken public very quickly when a financing window opens. We would raise money in these new companies as rights offerings, which would allow Arizona Metal shareholders to have the first opportunity to fund these new companies. And that would be on a pro rata basis on their holdings, the same as we would do with the SpinCo shares. The next question, how will the SpinCos be structured? We expect that Arizona Metals Corp would retain a 19.9% ownership in shares of both Sugarloaf Gold Corp and Arizona Royalties Corp, with the remaining shares to be distributed to the company's shareholders on a pro rata basis. And I sort of addressed this, how will the SpinCos be funded? Well, Arizona Metals would initially make a modest cash injection into both Sugarloaf Gold Corp and Arizona Royalties Corp in order to provide 12 to 18 months of working capital for the spinouts. These funds would be used to pay for the ongoing legal and accounting fees needed to reach a listing decision. None of the funds would be going to salaries or consulting fees. And just to give an estimate of what we think here, we think the cash needed for the royalty company would be roughly $250,000, and for Sugarloaf Gold would be around $400,000. And that would be to give it 12 to 18 months of runway so that when the market's right, it's ready to list. If additional funding is required, the SpinCos would undertake rights offerings, which would allow shareholders to receive their holdings through the spinout. That is, current Arizona Metal shareholders would have the first opportunity to participate in funding these new companies. And what is the expected timing for shareholders to receive shares of the 2 new companies? We anticipate that circulars for the 2 new companies will be filed in early April, right after filing of our March 31st year-end financial statements. The shareholder vote, both of these transactions would be voted on, would likely be held in mid-May, and assuming they're approved, the shares would be distributed very shortly afterwards. So right after the vote, shareholders would receive shares of the reporting issuers, and if the market conditions are good right then, we would plan to list immediately, and if not, we'd have just enough working capital to keep the reporting issuers up to date until the listing window opens. Will the creation of these spincos be a taxable event for AMC shareholders? So the spinouts will be completed under plans of arrangement, and we anticipate that rollovers will be available to shareholders in order to reduce or eliminate tax consequences. A full discussion of the tax impact will be contained in the circulars, and of course, as everyone's tax situation is different, once you get your circular, please be sure to consult your own personal financial advisor. Another question here, what is a reporting issuer? This is essentially a public company that is not listed on an exchange, but meets most of the listing requirements. It is required to file financial statements and all the other public disclosures. How many shares of each SpinCo can I expect to receive as an AMC shareholder? So Arizona Metals Corp will retain 19.9% of the shares of each newly created company. That's Sugarloaf Gold Corp and Arizona Royalties. The remaining 80.1% of the new company shares will be distributed to AMC shareholders on a pro rata basis. So the final exchange ratio, so the proportion of new NewCo shares that you would receive relative to your AMC shareholdings, will be decided closer to the listing time and will be based on market conditions at the time, but would still be on a pro rata basis for all shareholders. Another question, why have the SpinCos in the reporting, why put the SpinCos into reporting issuers rather than listing them immediately? So having the SpinCos ready to list in the form of reporting issuers will avoid forced listings in an unfavorable market. And by providing the SpinCos with 12 to 18 months of working capital, they can be ready to list immediately as soon as the market conditions allow. The point of this and the goal is to avoid the dilution that would result from financing or being forced to finance them and list them at depressed valuations. Rather, this gives us the opportunity to finance them in an improving market, and the shareholders maintain that same opportunity to participate and put money into the new vehicles. Why spin out the K-Mine royalties now rather than wait for a takeout of Arizona Metals Corp? So the K-Mine project is very unique in that it carries no royalties or any other encumbrances. It's very typical for historic deposits similar to K, and we see this in the region all around us. They typically would have legacy royalties ranging from 2 to 5%. But rather than selling a 2% royalty or see it sold at some point in the future, our plan is to spin out a 2% royalty to our shareholders in the near term. We believe a royalty of this size is small enough that it will have no material negative impact on the economics of the K-Mine deposit, but it's also large enough that it has the potential to create significant value as a new royalty platform. 20% of that would remain in Arizona Metals, and the remainder would go straight to our shareholders. And we see from previous examples, royalties can often trade at much higher multiples than the underlying asset. Obviously, in the current depressed market, you don't always see that, but what we are planning for is what we think is an inevitable return of a much better market. And because of this, we think these royalties could, in time, have a lot of value for our shareholders. Another question, why spin out Sugarloaf now rather than drilling it first? So we believe Sugarloaf definitely deserves further work, especially with the drilling and met work we've done to date. But the investor funds we've raised in Arizona Metals to date have all been for the advancement of the K-Mine project. Part of the reason that it's been allocated this way is that Sugarloaf is really a gold-only project, and many of our investors own Arizona Metals for its exposure to copper, zinc, gold, and silver through the K-Mine project. So we believe creating a new vehicle for Sugarloaf is the best avenue to advance it and surface this value for our shareholders without diluting their holdings of Arizona Metals or draining the treasury that's really assigned for the K project. Sugarloaf is also still at the early stages of its development and carries significant exploration risk, but shareholders that want to participate in moving it forward will still have the opportunity to participate through rights offerings as well as their current shareholdings. Another question, will the shares of Arizona Metals Corp be split to create the new SpinCos? No, the shares of Arizona Metals will not change. Ownership will not change. Shareholders of Arizona Metals will, at the record date, will simply receive pro rata shares in two new companies. And question, will the management of AMC also be the management of the two new companies? AMC management will act as interim management for the SpinCo reporting issues only until they are listed, at which point we'll find new teams and boards to be appointed. And also the interim management will not receive any salaries or fees or consulting fees from these SpinCos. And I think we've got a few here. Yeah, we have a lot of question about the timing, and as I mentioned, we're doing this now because it can take many months to get these type of vehicles listed. The reporting issuer gives us the opportunity to be prepared for a good market, so that they can be ready to list when that window opens. I've got a separate question here on this Western target. How excited do you remain on the Western target based what you have seen in the drilling so far? So the Western target and the Central target are still very high priorities for us. As I mentioned, I'll just jump back a bit here. We have identified some new priorities which is a combination of what we've seen in the drilling at both the Central and the West, as well as a recently completed property-wide rock sampling program. So the Central target, we put in 7 holes, which amounted to only 4,500 meters. So really very little drilling. At the Western target, 8,000 meters, which was 8 drill holes. So a total of only 13,000 meters. We've only tested 10%, well, less than 10% of the strike at the Central and the West. But even in those, for an exploration program, very small programs, we've, I think, had two very good hits. So the first one in the North Central zone on this map, you can see we hit 2.7 meters at 0.5% equivalent. So not a huge interval or massive grade, but this is exactly what you'd be looking for at the edges of the K deposit. If you're looking for a new deposit, you look for a limb of a fold. And what we'll be testing here in the North Central is where can that thicken up to more like the widths and grades we see at K. As I mentioned, we've got drill pads ready to go there, and we're actually looking at can we add a few more. And then the West too, only 8 holes drilled, but some very good hits in the initial holes. One of the holes, I think it was 118, intersected 3 meters at 3 grams per ton gold equivalent, but within that was almost a meter running 9 grams gold equivalent, but in the same type of zinc-rich sphalerite that we see on the edges of the K deposit. So really what we think for the Central and the West is we're potentially on the edges of something big, similar to what we see at K, and now it's a process of vectoring closer. So the pads to do that at North Central and Southeast are ready to go. The north and northwest, we're waiting for the plan of operations to put in new roads and pads, and the reason for that is it allows us to increase our disturbance from 5 acres to well above that, potentially 50 acres. So a question here: since the Sugarloaf project has not been fully drilled out, will there be significant interest from other firms? Yes, so there has been a lot of interest, but our view is that what we're trying to do with Sugarloaf is show that rather than sell a small percentage of it or do a JV with another junior, we really think there is the potential to show a multi-million ounce deposit here. We're starting with the green is 1.5 million. We think you can triple the size at depth, potentially triple it on strike too. It's open in every direction. The deposit covers 1 kilometer, but we've got 4 kilometers of open strike. We've shown the depth is potentially 3-4 times what the historic resource was. Obviously, in the current market, these deposits maybe are trading today at $10, $15 an ounce. The reason to spin this into a reporting issuer now is that we know that in a good market, which inevitably returns for the juniors, these can trade at $50, $100 an ounce. So the goal is to increase that 1.5 million to a multi-million ounce deposit. and have it ready for when these projects are receiving much better valuations. And that's their, similar to the royalty company. The reason to do a reporting issuer first is it can take it does take months to get these ready, to get the financials, the legals, all the documents ready to spin them out. We're preparing it now to be ready for when that window opens. We can list it and start drilling immediately. Yeah, I think we have a lot of similar questions about the timing. What would be the timing? As I mentioned, the circulars would be sent in early April, as soon as we file our year-end statements. So we'd receive 2 circulars. We anticipate the votes to be mid-May. The reporting issuer shares would be distributed almost immediately after that. And then the listing decision would just be a function of what's the market conditions in mid-May. But we would put, as I said, a modest amount of cash into each company, so that if we have to wait a few months, they can remain reporting issuers until the timing is right. I think that is it for the questions. I think we've answered all of them here. If I've missed anything, please feel free to email or call and with anything we've missed. And as we get more information, we'll have more updates in both our newsletters and future press releases. All right. So thank you everyone for your time.